Welcome everybody to this Thursday's live market update and charts of the day. Hope you're well. Hope your week has been good so far. Apologies from the start if I am sounding a little sniffly. Um, a little bit of a flu thing going on there, and I wanted to be here to share this time with you, which is always really special, just to sort of talk to you about what's happening in markets right now. Perhaps even, of course, find a few charts of the day for you to consider and have a look at through the course of the day. If you can just let me know everything is good, your end, that would be fantastic. And we'll obviously put up this important message just to remind you that this is for educational purposes only. Please make sure that you do your own due diligence on anything you see or hear. Make sure you follow trading plans consistent with your own personal trading objectives and financial situation. Uh, Thank you. Hello, Sonia. Hi, hi, Wayne. Good to see you both of you, as well as everybody else, of course. Right, let's get into looking at some stuff. So there's a few things happening, but it's a market which just feels as though it's a little bit in waiting for the next bit of information to come across the wires. So, but we'll pop through the news wires. Oh, sorry, what's come across the news wires, and then of course we'll have a look at some charts. We saw US indices continuing to pull back from record high testing we saw recently. The S&P 500 posted its fourth straight day of losses. Um, Not dramatic losses, for sure, but nevertheless noteworthy of in terms of the last week or so. The Dow was the only one of the major four indices to the upside. Let's have a look at some charts in a moment. The other thing, of course, which is really come across the headline significantly is the Ukrainian Russian conflict negotiations. Of course, Trump had a fairly or reportedly disappointing meeting with Putin in Alaska last week. And then we had some sort of news over the weekend that there may be some progress there. That's not really had any more detail put around it. And indeed, we had NATO jets scrambling, I think is the term, after um, a Russian drone fired really close to the Ukrainian-Romanian border. To watch this space on that one. Markets don't seem too perturbed about that. But we are seeing US futures bounce a little bit today, slightly higher in Asian trading. Asian markets generally positive as well. Uh, ASX, when last I looked, was up around about 0.85%. But across the other major indices, then we're seeing gains in the Hang Seng and then Shanghai, though fairly small. The Kospi, the Nikkei is a bit shy. It's around about 0.4% to the downside at this stage. European market futures are also pointing to a cautiously positive open. Everything else is sort of waiting. As I said, it appears as though it's waiting for the next bit of information. So we've got the US dollar index trading mid-range. Likewise, with gold hasn't moved very much, trading around that 3,350 level. We'll have a look at charts of all of these, of course, in a moment. The buy-in into copper after that major tariff-induced drop seems to have subsided, and oil is honouring that $63 support. Bitcoin is holding support after pulling back from record highs around about 112,000. And we are getting some data across the wire today with global flash PMI data. Numbers out of Australia and Japan, both of which have slightly beaten expectations, which is positive. We've got US weekly jobs and fully fed manufacturing data later, as well as that continuing PMI data that'll come out of the UK and Eurozone and the US later. We've also, of course, got the Jackson Hole Symposium, which I referenced earlier in the week, where we have the Fed chair speaking tomorrow, I think it is. It'd be interesting to see if there's any telegraphing of what may happen after the anticipated September rate cut that the market's priced in. So that's really what is going on news. Let's just have a look and check out what's happening in charts. Let's just pop up let's start with the Nasdaq, I think. So there you go. You should see a Nasdaq chart coming up right now. And hi, Alice. Um, and you can see there that that pullback that I was talking about over the last few days, not significant in terms of distance yet, considering how far it's run up over the last few months, but it, it's around about 2.5% in terms of where the futures closed last night. You can see that slight positivity in this morning's trading. Maybe a trade opportunity here. Should we start to move over 23,360 across the short-term MA? Nice range there to trade. If we look at the S&P 500, very similar story. Would probably want a move up, say probably around about 420 on this. If we just pop on the hourly chart, you see that a little better. With a potential 20 to 25 point move up to the upside, I would suggest. And you can see this again on the daily chart, that 4-day drop. Um, but the fact that we're still, you can see the higher lows here, so we're still very much in uptrend overall. But this is interesting that it's made its way down to around about this level here. So just that rejection wick was important as well. If we look at the 30-minute chart, you can see that drop and subsequent recovery during the course of the night. As for the US dollar, as I said, trading fairly well range bound after that pullback that we had I think 3 weeks ago. We can see there we managed to find some support, albeit temporarily, maybe around about 97.50. But this is starting to look a bit triangular, suggesting market uncertainty at this stage. And gold, as I said, is trading around this 33.50 level. You can see there currently it's at around about 33.42, so it's trading within a fairly tight range. After attempting to pull down, it had a good day yesterday, of course, and shifted back up to that 33.50. So again, not much change on the week at all to report. Um, and maybe the possibility of a long trade to the upside. But this looks rather choppy to me. It would be, if you are going to trade anything like this, you're going to have to be really on top of it, I would suggest. There's copper. We saw that bang coming in after that tariff-induced drop up to that 457 level. Then pull back a little. So we now appear to have a temporary support at around about 450. So a 7-cent difference between the two. If we look at the shorter term time frame, you can see it has moved back up to 450 today. So really short term range, or really small range on the shorter time frame of about 3 cents. So again, it's one that lacks a little bit of direction, just looks uncertain in terms of what might be next. But maybe a continuation of PMI numbers, a relatively good jobs number might help this up, I suppose. But um, yeah, I'm not jumping up and down about any technical opportunities that I'm seeing this morning in the major asset classes anyway. With oil, I'll just bring this back up to 64.33. You can see that on of $63 there that it's bounced on top of now for the last week. Slightly to the upside today, looks as though a test of 64.35 might be on the cards, and that might be a technical opportunity perhaps. Around about, or just shy of $2 in that actually, so there could be an interesting opportunity there. If we look at the hourly chart, you can see the lines we previously drew. So a little bit of work to do. Perhaps those of you who are more aggressive could look perhaps towards this level at this point here, which was support here, and resistance at this point here. So that's 64.20. Just what I'd be doing if you are interested in trading something like this um, is potentially using these previous highs as reference points for perhaps trailing stops to the upside. Again, not compelling right now, but could become so as the day progresses. And Bitcoin once again bounces off 112,000. You can see it did that back here in early August. So it's done it again the last couple of days. It doesn't look as though this is being done with any conviction. If we look at today's candle, we are actually slightly down on the session. So not a lot of buy momentum there. Looks as though there's a temporary important technical level around about this 114,825. It was support here and here. Um, and just as it tested it this morning before sort of dropping down. So again, fairly mid-range. So the 2 points you'd probably be looking at. Let's just bring this line up here. Would be perhaps that 114,825 to the upside, 112,675 to the downside. Outside of that, you don't want to be forcing trades on a day like today. Oh, excuse me. I want to have a look at some FX crosses. Let's have a look at the Aussie yen, which is sort of looking interesting. Let me just put this on its standard template. There we go. What's interesting about this is the breach we had yesterday of this level at around about 95. You can see how important this level was. We had a sort of looks like a long-term double top there. We had this move early August. It was resistance back here in early July as well. You can see the previous price action back here in March and April. So the fact that we've breached that looks technically important. It does look as though we could get into quite a messy type of area here. In the first instance, we got some support here at around about 94.64 on the daily chart. Bring that down to the shorter time frame, you can see that there. You're probably looking at yesterday's low if you're interested in shorting this, which is if you look at yesterday's low candle close around about 94.50. Outside of that, I'm not really interested in this. If we get a move back over 95, perhaps to 95.10, that might be an interesting level to keep an eye on. Outside of that, you're just trying to scalp. The euro yen, you can see here, is in a trading range. So yeah, to me, I mean, even if it breaches one of these two key levels, there's only probably about 20 pips to the upside if it breaches the resistance, 20 pips to the downside if it breaches support. Again, looking quite triangular, so I'd probably leave that alone. Let's just have a check-in on the US yen. So the US Swiss is not looking quite directional today. Maybe the Swissy is the currency to just have a look at some crosses. 80.50 looks like an important level on here. But the upside on this is only around about 10 pips. But always check in on what an average ATR is. So if we can get 12 pips out of this, it's 2 ATR, just to put it all into context. 12 pips from there would be around about to that level there. But technically, I'm not that enthused by this. If you'd seen this earlier on, breaching that, then that might have been interesting. But we have got a breach of as I said, a key level around about 80.50. Less noisy on the hourly and less noisy again on the 4 hourly. But it's not, despite the move, it does look as though it might be quite choppy. I'm just checking. I'm going to check in on the other currencies. Let's just check on the GB pound Swissy. So you can see that big drop we've had um, over the last couple of days or so. That's not particularly compelling. GB pound Aussie doesn't look bad though. I quite like this. So it's approaching 210. It's tested already in today's trading. You can see how important this 209.95 resistance is, and how many wicks have tested actually 210. And if we do get a breach, then there is a potential move up on the daily chart to around about this 212.28 level. Looking at this on the hourly chart, that 209.95 was the high from yesterday. And then we've got to go back quite a long way before we're actually here again. So I think there's a potential 40 pip move here. Maybe 30 pips actually. Let's just check out the euro Aussie. Bring it right in. So we are still very much in uptrend on the euro Aussie. On a daily chart. See that breach we had a couple of days ago of that level at 180.35. We've seen it up 100 pips since then. This is what I think, pretty sure we talked about the euro Aussie on Monday. So what we're looking at now is a potential move over yesterday's high. At the high bodies, it's 181.37. 181.53 was the wick high yesterday's trading. So pretty close to that right now. What is difficult is finding a next line in the sand. Even on the 4-hour chart, it's sort of difficult. That looks as though there could be some nice consolidation around that level there. Yeah, there's a lot of candle action around here, isn't there? That's quite significant. Because it was back here in April, I would be cautious about looking this far back on an hourly chart for signs of a um, potential support. That was really choppy, wasn't it? It's just holding on that a little more. Really massive candles back in late March, early April. Liberation Day was that? Anyway, so I like this. Is going to be my chart of the day. I'm going to do it on the hourly chart. Watch for PMI data coming out of Europe later. In terms of how to play this might be an ATR sort of trade. So you might sort of take if we look at the ATR on the hourly chart, for example, it's 20 ATR. So we might look to, if we do something like this, that would be 20 ATR apart. This is a way that you could potentially play this. So if it bridges that one, then we're in. If it bridges the next one, we maybe move it up to a break even. Actually, maybe that's too tight. Maybe better do now a 1.5 ATR. So that would be around that level there. So 1.5 ATR would be 30 pip gaps. I haven't drawn those quite accurately, but you get the idea. So if it breaches the first one, we're in. If it breaches the second one, we'd take our trail up to break even. If it breaches the next one, we'd take it up again, and so on and so forth until we get a trigger. And as I said, if you look back at the daily chart, you might sort of say, well, look, okay, maybe 182.20 might be our top on this, or you could just continue to let it ride. So that's an interesting one. Even if you're not interested in trading, that's an interesting one to keep an eye on with that concept. Okay, so let's move to the ASX. Got a couple been tracking. There's 360 ASX. So that's pulled back. We liked IEL the other day. That's continuing to move towards the top of this candle here. Keep an eye on $5. I think that's a key level. It just looks as though it's pausing now beneath that. But if we do breach that, we've potentially got a gap to fill, which is quite positive, of course. Zipco, you can see there that we've had a pullback, fairly significant pullback from there. Whereas BVS continues to look really strong. We suggested there might be a bounce off this level. and you can see there it's continued to do so. That was the support there. So the last couple of days continued to move higher. I think this potentially could be on its way up to around about 2040. So that's still a significant difference from where we are now. And that confirmation of better candles has probably sort of substantiated that case with a potential 5% in the offing. In terms of what's looking okay for today, there's possibly a couple to have a look at. GNC we referenced on Monday. That continues to do really well. As you can sort of see there, that breach of $8 is what we're looking at, and we've had that. We had that back a couple of days ago. Yesterday, it failed to sort of, or it retested to the downside. Nice buying coming in today. In terms of where this could go, well, maybe a target on this would be around about that level there, around about 824. So it's probably, but as a medium term hold, it probably works quite well too. Um, so that's all good. Right. Okay. So a couple of others to have a look at. I haven't had a look at AX1 for ages, but that's doing really well. I noted this morning, you can see there, really positive over the last few days after we moved out of this range. This gap looks as though it's going to be filled. Still some move up to the upside to be had, and possibly a 6% move up to maybe 179 is possible. Um, 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 it's also look at PLS. Lithium stocks I talked about the other day, but that doesn't appear to be doing much today. Gold stocks looking all right. A2 Milk has been doing all right as well. So here's A2 Milk. Um, so watch for a breach of 884. I really like this as a potential target, actually. For entry consideration. Long term, it would potentially precipitate a move up, maybe even to test $10. Yep. So I'm going to make that my chart of the day. Um, and the other one, as I said, I will keep an eye on would be AX1 for this potential move up to 183. So those are my two ASX charts. Looking at the US ones have been keeping out. Robinhood never did break 114, as we sort of talked about there, didn't close over there. And that's now pulled back towards the bottom end of the range. Possible opportunity if we bounce off it. You can see a fairly big rejection candle, which is sort of interesting. Likewise with all of these stocks, they've just sort of pulled back. Nvidia's pulled back. Look at all the buying that came back in. If we look at the hourly chart, so you can see the drop there on the hourly chart, and straight away the buyers came back in to bring it back into this range again. So you've got to wonder whether a retest of up to 182. I'd probably not do much with this, but leave it for a little while. Medtronic, who are in the medical electronics space, looking very positive. This is post earnings. A nice bounce off of 200 MA with a potential move up and maybe over 94.50 could be one to keep an eye on. Maybe a move up to $100 is on the card should we breach that. We're also looking at, I just want to check in on, we were looking at some of the airlines the other day. So let me just, LUV were one we were having a look at. So let's just do that. Now that pulled back a little bit. Let's get the up to date. So trading around this 200 MA, I still like this if we get a move through potentially 3180. Still think this has the potential to move to around about 34. Chinese internet stocks still looking a bit shaky. If we look at JD.com, all it's doing though is testing support. So again, if you like this long term, it may be an accumulation opportunity, but it wouldn't be jumping up and down on my jumping up and down on my radar as yet. Plus, the tech stocks having a pullback, so it's really a case of are you seeing these at value? As Google, for example. Not surprisingly, we've got a resistance there at 205. It was the high that it hit back here in January. So the fact that it pulled back from there is not technically surprising. So next move here, I would be waiting till it's over 205 again to get interested in Google. And let's have a look at Walmart, which has breached $100 again, but still doesn't look that. I'm not sure whether Walmart have actually reported yet. We just have a quick look at VMT earnings date. 21st of the 8th. Actually, reports today. Keep an eye on that after do I think the Fed will drop rates this week? The Fed will drop rates, but it's not due to meet this week. We had the Fed minutes. The next Fed meeting is September the. Let me check that for you. But it's priced in now, Rob, I think. Let me have 27 days until the next Fed meeting. And as I said, it's virtually priced in. It's dropped off a little bit. 82% chance of a rate cut by. So 81% is pretty big. There's a further or a 50-50 chance of a further cut in either October or December at this stage. %30 chance it'll be down around about 0.75% from where it is now by the end of the year. If we look at December's numbers. So yeah, 17th of December is when the Fed next meet. So that's when to expect something. So watch Walmart after subsequent to earnings. The level that we're watching will probably be this high. We hit at 105.18. It look as though we're shaping up for some good retail earnings. Be interesting for sure. Outside of that, I'd just be patient right now. Everything's just had a little bit of a probably an overdue, some would say, pullback. So yeah, just keep an eye on what happens over the next couple of days. No, I'm not seeing any other sectors that are filling me full of happy feelings. And let me just put up PHM because we're talking about how positive the home builders were looking. But those have pulled back fairly significantly. You can see PHM there looks like actually a double top. I think it recognize it. 131. This is a record. This was a chart of the day back here when it breached that sort of 120 level. So yeah, I wouldn't be. I'm not seeing much that's exciting me. Let's just have a look. I don't even think the ETFs are jumping up and down. Let's have a look at utilities. No, everything's just pulled back a little bit after that. Walloping great move to the upside. Healthcare is looking reasonable. If you like the idea of entering a healthcare ETF, it's actually technically looking reasonable at around about 136.78. It's never going to be a massive mover, but technically it could work its way up over time to around about 140, which would be not too bad. 143 looks like a better move if you're patient. Outside of that, none of the ETFs even are looking great. So yeah, a bit of a day, really. It's to keep an eye on for sure. Um, but of course, we have got plenty of data coming out today. Any news of the Ukrainian, Russian, unlikely though it is, developments on the positive side would be good for markets. But at this stage, the market just looks as though it just wants to chill for a little bit, decide how far it is going to go down. We still haven't had a pullback at all. And this, if this is the degree of pullback, remember this time of year, somewhere in between July and September, we often get a sort of 5 to 10% pullback. At this stage, we're at 2.5, just to put it into context. So maybe it's a time to take some off the table. I can have, but certainly I forgot to have a look at Tesla, but I should do really. See, again, we had that sort of test at the key level, and it looks now as though it's going to move back down to test 300 again. So if it gets down here, there's your buying opportunity potentially again to take advantage of this continuing range. And now you've got a line in the sun to the upside that says, look, I'll be 345 looks interesting as a level. Somewhere around about here would take into account this price action, the support there, this price action here. So move over 345 looks good for a move, possibly to around about 360 and change. Anyway, I hope that sort of helps a little bit, answers some of your questions. Um, oh, just to fill in. Oh, sorry, Rob. I didn't complete your question. So your question was not only about Fed timing, but uh, also about is it an opportunity to dive into tech stocks? I think because it's so priced in, probably not. Um, but I think tech stocks are still probably the way to be. If there's a surprise in terms of any data that may accelerate Fed thinking or thinking about Fed, then perhaps that is the case. But bear in mind this Jackson Hole symposium speech um, that Jerome Powell's doing tomorrow night. Jackson Hole has historically been a place where sitting Fed chairs have announced um, something of note. So it wouldn't surprise me that there's a little more telegraphing in terms of what might happen for the rest of the year. So it could, if that's if that is, um, locking in possibly another one or two cuts, or even a 0.75% for the rest of the year, telegraphing. That confirmation would help markets, would boost tech and small cap particularly. So that's how I'm seeing it for right now. Anyway, you guys take care of yourselves. I will love and leave you. See you soon. And we'll catch you next time we do. See you later. Bye for now.